Do you ever catch yourself thinking, I know what I should be doing, so why don't I always do it? Yeah, me too. Every trader goes through that. Let's just talk straight. Because if you are trying to build real
Potential
consistency,
downtrend.
this is one of the biggest challenges. I know my trading plan. You probably know yours too. We build rules, we write them down, we study setups, we practice risk management. We might even rehearse everything over and over. So why do we still break the rules, right? So why do we still hesitate on good trades or chase the bad ones? It comes down to one word, emotion, right? Emotions are the biggest challenge in trading. Fear, greed, FOMO, overconfidence, they override logic. They hijack the plan. And they make me forget the exact same rules I swear I will follow. It's wild, right? I have been there many times. And I will have a clean price action setup, perfect risk to reward, everything matches, then suddenly I freeze. Or worse, I skip it. Skip the stop or widen the stop, things like that. Or I see something that almost looks like a setup and I chase it anyway. Almost looks like a setup, not a A plus setup. And that's where the frustration comes in. And because, I know what I should do, but I still don't do it. Why is that? If you have been there, you are not alone, right? That's the mental side of trading. And it's way tougher than the chart reading. Here is how I try to handle it though. First, I remind myself trading is not about perfection, right? It's about consistency, and perfection is impossible, but consistency is realistic. If I slip up, I don't beat myself up. I just note it, journal it, see what triggered it. And maybe it was size too big, maybe I was tired, maybe I had a couple of winning trades and felt bulletproof, that overconfidence. And it helps to look back and see the pattern. Second, I go back to my process, my method, my plan. And if I keep repeating the routine, it gets easier. It becomes a habit. Good habits beat willpower, because in the moment, willpower is weak, but habits can carry you through. Third, I try to stay aware of my emotional state. That
Potential
means
uptrend.
taking breaks, right? Stepping away, breathing, meditation, right? Simple stuff, but powerful. So if I feel my heart rate going nuts, that's a sign to pause, okay? Not to hit buy or sell. The market is always there, so no reason to rush. Fourth, I focus on what the market is actually doing, not what I think it should
Potential
do.
uptrend.
That word should is dangerous. It has trapped me a few times, right? So if I start trading on what should happen, I ignore price action, and that's a fast track to frustration. So I remind myself, trade what is happening, not what should happen. That keeps me grounded, keeps me from fighting the tape. Lastly, I remind myself of the long game. One trade won't make me rich. One trade won't break me either. But a series of impulsive emotional trades, they can break me, and very fast. So when I hear that voice, I know what I should be doing, so why don't I do it? I treat it like a signal, a red flag. That means it's time to slow down, review the plan, reset, or take a break at least, and get back to disciplined execution. So Because at the end of the day, consistency in trading comes from execution, not from theory, not from knowing everything, but from doing it, right? Following through, even if it feels boring. And that's the path. So, yeah, I wanted to share that with you because it's something I'm working on too, right? Every trader wrestles with this. It's normal, it's part of the process. Just stay patient, trust your plan, and trade what you see, right? Not what you feel. And that's how we keep growing. And mistakes still happen, right? Even when we have studied, even when we have a plan, even when we feel confident, the mistakes still happen. And you know what? That's normal too. And this is a process. Trading is a process of building habits, and habits to create consistency, habits to manage risk, habits to see the setups clearly. And building habits takes time, and there is no shortcut. No matter how experienced you are, it's easy to slip. And real time decisions are messy because they happen fast. And sometimes you only realize the best choice after the fact, right? Anybody can come up with a best plan after the fact. So, because each moment is different in real time, the market changes every tick, and no two moments are exactly alike. The patterns repeat, but each moment is brand new. And that's what makes this challenging, right? You might spot a pattern, you might plan your entry, but in the heat of the moment, hesitation can sneak in, or you might act too quickly or hold on too long, right? These things happen, and these things have happened many times for me, right? And they happen to every trader I know. So here is what I am reminding myself, right? If I still mess
Uptrend.
up, it's okay. I will try to go easy on myself and be honest, but don't beat myself up. Because the only way to build real consistency is to stay in the game. And if I tear myself down over every mistake, I won't stick with it. I will lose confidence. And that's worse than any single losing trade. So I focus on learning from the mistake, not judging it. You know, was I distracted? Was my sizing too big? Was I trading tired? Was I chasing? That review is where I grow. But after that, I let it go. And I try to let it go, even if it is painful sometime. But there is no sense carrying regret, right? One trade doesn't define me. One mistake doesn't erase my skills. And I am a trader, mistakes are part of the job. What matters is how I bounce back, right? How I reset, how I trust my method again, right? And keep executing. That's the mindset I want. Every day I try to build consistency, one habit at a time, one routine at a time. And I know it's not perfect, and that's fine, right? Perfect isn't the goal, consistency is the goal, right? Strong habits are the goal. So if I mess up again, I will remind myself it happens, right? And remind myself to stay patient, stay honest, learn, and then move on. All right. And that's how I build a long term track record. And that's how I stay in the game. So, yeah, mistakes happen even with all the best preparation, and that's okay. Each moment is different, real time is messy, but if we keep growing, if we keep improving, we will get better step by step. And that's what matters. All right. So let's trade well today.
Uptrend.
All right, let's take a quick look at the market context and some of the winning strategies and setups. So this is yesterday's opening range or one of the ranges, and see how tightly the market is moving. So it's kind of undecided whether to go below. So this is the daily chart, this is the hourly chart, and this is the 5 minute chart. Of course, this is 1 minute. And so let me remove previous objects. So typically, we don't want to trade first half an hour. Let the market settle and show its direction and tendency. Then after 9, and also check any economic reports. So today at 10 Eastern or 5, 8, I mean 10 Eastern or 9 Central, we have this wholesale inventories report. And that is not a high impact. And we also have FOMC meeting minutes at 1 Central. Again, there is no federal news conference or anything, it's just the meeting minutes, but it can still have some impact on the market. So on these days, typically market does not move enough, very high range, but NQ will still provide some good opportunities. And these are some of the trades from yesterday. I will go through them quick. Some of the previous trades. We will go through them real quick, but first the context and the strategies. So we will mark yesterday's high of the day, which is already marked here.
Uptrend.
Yesterday's low of the day is this blue line. So see how nicely they are coinciding with the pivot points R1 and S1. Again, yesterday was also a tight range day, so that gave me the opportunities to recover. But if it ripped like this, so it would have hit my loss limits. But so when series of days are so tight range, it can actually open up in one side or the other today. But with FOMC meeting at 1 due, this might take a while. So we will try to stay cautious. Mistakes can still happen, and we all trade our own plan. Let's also mark the pre-market high and pre-market low. And then once the first 5 minutes, high and low. So that being said, let's review the 5 strategies. So basically,
So these are the 5 strategies and setups, and how they worked in the real time can be tracked. Let me try to pull up some of the previous trades that aligned with these strategies. So the key is this liquidity grab, and after a clean break of structure with optional fair value gap. So in the 5-minute chart like this, where if you have a clean break of structure, then we also have this fair value gap. Of course, this happened between 7:30 and 8, and I don't trade at these times, but let's say if this situation happen again. So typically somewhere here, middle of this bar, you get the opportunity, and you can also see the fair value is here. But again, you have to align this with the bigger time
Uptrend.
frame context. So, make sure it falls in one of those categories. But the strategy itself is, so if it is moving like this, if the trend is too strong, it may not retest immediately. So that's when you apply the rest of the strategies. But this is the break of structure. And then after the break of structure, make sure there are impulsive moves, then retest and continue. So, and this is the start of that break of structure. And you will find your liquidity somewhere here, because most people will place their stops here or here, so market pulls back to cover, or even the whatever caused this impulsive move, it will revisit that area. So that is the liquidity grab, and then the range break
Potential
and
uptrend.
retest is another favorite one. So you can, so we have the, pre-market high, pre-market low, yesterday's high and yesterday's low, and also the initial, you can either take the first hour, but first hour might take too long. That's the initial balance. You can look at the opening range, like, first 5 minutes. And let me clear this up. And so in the range break, so if this is one of these ranges, and if it is bouncing around, so you can take some of the fade trades here, but after a couple of fades, be cautious, because after some time it will break out, whichever side it breaks out, and when it revisits, and then there should be an impulsive move. Align that with the candle structure. So your entry is here. So typically you can target for 1:2 risk to reward there, but you can put whatever your risk profile is. So I try to keep the initial profit targets small, but once the trend is confirmed, you can add to it or increase the target and move the stop to the break even. So that is the range break retest, and then impulse 3 wave. So you can align that with the rest of the strategies, and wave 3 aligns with what Elliott wave strategies. I mean, it's based off of Elliott wave strategies. And let me clear these drawings and start the next one, which is, so this is wave 1, wave
Potential
2,
uptrend.
wave 3, then wave 4, wave 5. This
Potential
is the
uptrend.
impulsive move. So these, when you hear this uptrend and potential uptrend, so these basically try to predict the start of this wave 3. And it has some internal calculation to see there is a potential in whatever. So waves are fractal in nature. So whatever happens in the bigger time frame can also happen in the lower time frame. I mean, so these are the hourly chart, bigger time frame. So while this is doing the corrective moves, this can have an minor impulsive moves here, and these signals are applied to the 1 minute chart. So when you get the signal, first or second signal here, place a limit order somewhere near the signal, not at the close of the bar. And the potential are these gray icons that are triggered intra bar, like internal before the bar is closed, but so that's why it's not confirmed.
Uptrend.
So that's it. So at the very end, it still happened because there is no filter per se, because it broke this high, and there are other additional filters, so it won't give. But major advantage of this signal is that it keeps me on the right side of the balance, I mean the bias, as long as I respect it. Sometime I may be stuck on a wrong position, so I have to kind of, you know, override the signal. But I mean, the signals themselves are not overridden, but my individual trades may be overridden. So you get the signal here at the close of the bar. So in this case, any limit order placed mid did not get filled. If you are aggressive, you can take at the close of this bar or somewhere near the close, that would fill and it might hit the target. So again, same thing here. So it needs a trendy move. So confirm that with MACD or ADX, volume. So that is that one. Then the manipulation candle and reversal basically. So on a 5 minute or a 15-minute chart, if you see a long manipulation candle, then followed by a doji type or like a long upper wick candle. So, and when the next candle starts this downward move, you can enter somewhere there, and at least 50% of the retracement you can expect. So it can go either way, but that you can confirm with rest of the things. I don't use that too often because it requires counter trend. Even the liquidity grab at some point, it might look like it's going counter trend, things like this, and any minor stops will knock you out, and then it will progress there. So these are hard to predict, especially in NQ. So you have to take some chances or just stay out. So no position is also a position. And the last one is, this is actually part of the ABC. So I need to update this slide to say ABC pattern, which basically is something like, okay, it moves in A, B, and then C. So in this, if you see some kind of a triangle, and then when it breaks to the upside, enter somewhere here. And so this is the A, this is the B, this is the C. So you try to catch this here. Sometimes I might get trapped trying to follow the same thing one more time here. And so watch out for any major resistance here. So that might not repeat again. So if it has already happened, unless if the trend is too strong, so it keeps going higher wherever it is dipping to this moving average, you can take a trade, but it can also whipsaw. So in a nutshell, these are the main trading strategies. And market is about to open in 5 minutes. We will just watch for first few minutes and then see what opportunities present today. So one thing to remember, mistakes can still happen, but uh, there is no need to rush. There will always be additional opportunities, and it's okay to miss. And it's okay to take a stop. That is even more important. I
Uptrend.
sometimes, because of whatever reason that I talked about earlier, mistakes can still happen, and that is part of being human. So that is that. Also, we'll touch on the
potential uptrend.
Yesterday's trades. Uh, so here, this is where I will export the today's trade. So um, yesterday's stream contains everything till here. Then I continued in the Zoom room. There again, the first trade was, took the stop. That was the ideal thing to do instead of avoiding, and that gave me the opportunities to recover. But if I was hold on to that, it would have been not wise. So here I was unable to, honor the stop. And since it was a range bound day, I got saved, but I cannot expect that. If the market rips, I cannot count on that to happen. And I have one more safety to protect, that is the account level daily loss limit setting. So I don't change that one because that's not easy to change, or by the time I go there and etc. So I honor that one, and most of the time that is easy to honor because of the tediousness of changing it. But stops, since they are just on the screen, I might tend to move them up or down, and that was the mistake. So if market was like a high range day like this, it will not recover. But as you can see, um, majority of the days will be somewhat within the range, but still, on a daily chart, these moves are huge, so it can knock you out. And then, even though it can come back below the your target price, things can happen. But the ideal plan there is to just take the stop and look for new opportunities later, even if that reduces or even eliminates the
Uptrend.
day's gain. That's what I am telling myself. It does not mean I can stick to it all the time, but I'm getting better and better. And everybody has their own tendency to work on and improve upon. All right, so market is about to open in 40 seconds.
Potential uptrend. 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 Potential uptrend. Uptrend.
Order submitted.
Potential uptrend. 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 Potential uptrend. Potential uptrend. 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 Potential uptrend.
So this is the mistake of expecting a pullback too soon, because even though the manipulation candle happens, it can go on for quite some time. And so I entered too soon, expecting so I looked at the 1 minute candles here, and I thought that could be the reversal. So especially this upper wick that threw me off. But on an open drive like this, um,
Uptrend.
it is should have waited for that candle on a 5 minute chart. So right now the game plan is, if I double down, that would exacerbate the risk. So sticking with one position, uh, I can still close it and wait for the new opportunity, or uh, put a hard stop. So right now my hard stop is at the above the big number, and whenever there is this kind of an exhaustion move, that will take a breather, but on an open drive may not pull back all the way here. So this is yesterday's high. So it broke out of yesterday's high. When it already broke out, my expectation here was retest and continuation, but that pullback did not happen. And with NQ, it may not even happen today, right? So it is the danger of entering too soon. So the opening range itself is here. It's quite above
Uptrend.
yesterday's high. So when it is already above yesterday's high, should have at least waited till the end of the opening range. And then it did not even retest the opening range properly. So at the very least, it might retest the opening range, but it is well above VWAP and moving average, and it's coming out of this dip on the daily chart. So this is a very risky position to be in right now. So only game plan here is to see if there will be any pullback, because right now it's in an uncharted territory at all-time high. So there will not be any uh, historical resistances above. So only resistance now is whatever it creates now. So let's see. So this is the previous resistance 23,086 from. Anyway, I need to have a fixed chart in order to see that. So it has even broken above that. So it is doing higher highs and higher highs. And so instead of short, if I was long, I would have exited here anyway. So it is very hard
Uptrend.
to catch the entire move. But still, a reminder for myself is my original plan was to stay neutral till 9 anyway. And the second one, I think the major one is if it is already opening above yesterday's high. I mean, of course, anything can happen, and sometimes it opens there and then, thinks that it's all-time high, it will pull back and then it will continue, etc. But the warning signs here could be it's already broken above prior high, and or at least wait for this candle to form on a 5-minute chart. So if this remains red for next 3 minutes until this 5-minute candle closes, there is a potential reversal. But if not, it can keep going for even some more time. Even if it's going to pull back, it may not happen that soon. And it may not happen in a straight line either, like this. So this is the danger of this manipulation candle, counter trend to the manipulation candle. So my learning point here is should wait for a reversal candle to appear on at least the 5-minute chart. So I would say now would be the time to execute that setup and keeping the stop tight. And I cannot add a double down to this position right now because that will reduce my buffer. So my strategy here is to just wait for it to come back to the opening range at the least. Or, face hitting my buffer, which is not the entire buffer, just the daily loss limit buffer on this account. So even if it pulls back, the first pullback might only happen till here or something. unless it surprises and actually pulls all the way back. So it can pull back here and then continue again. No, it might do a couple of moves before it starts reversing. Then also we have a news. It's when there's a low impact report at 9, which is the final wholesale inventories in 5 minutes. And that can have both positive or negative impact. And if it is good, it might keep going bit more. So the candle I was expecting on 5 minute chart did not fully happen yet. And the confirmation of that, if it is going to happen, is the next candle on the 5 minute chart should be red. But, you know, the way it is going, of course, anything can happen, but the way it's going, uh, it seems less likely. Trend is strong, volume is there. So when I took this trade here, volume was still there. So only thing that threw me off is this upper wick on this 1 minute candle. So a triangle or a bull flag is forming here. And, you know, trading against the bull flag is dangerous because it will break out to the upside. So, I mean, the reversal here is a good setup if you can keep the stop tight. Unlike my trade here, which is totally wild. And even though right now it looks like it's pulling back, uh, it can be a fake out. It will pull back slightly and then continue in the opposite direction. But at least this bar that I was thinking to happen less
Downtrend.
likely is less. And then I got this alert about the downtrend alert. This against such a strong uptrend, the first alert to be ignored typically, unless except for this is like kind of overextended. On a daily chart, it is so NQ total points from yesterday's open is only 180. So sometimes it can go even, uh, I mean, recent days the range is around 200. So from that point of view, it has reached the limit, but it has gone even 300, 400 at one point. That range used to be 300. We're not expecting a straight pullback anytime soon, but potential exists.
Downtrend.
So if at all I wanted to go strong, short, now could be the time, but still respect the uh, stops. So unlike what I did just now. So against a strong uptrend like this, first couple of downtrend signals don't necessarily succeed. So for that reason, even this candle that was forming red, it might even break out on the upside like this. So this account is nearing the uh, daily loss limit. And the way it is going, this is my bad to, do the counter trend trade. Even if I did, my stop should have been at least here and be done with
Potential
it.
uptrend.
I don't know why I stuck to it. Maybe I was already committed and that, the sunk cost fallacy kicked in, or some kind of a uh, assurance that it will pull back at least once, but that pullback might not happen within the time frame that I want it to happen. So that's the other reason to eliminate my this manipulation candle counter trend trade setup. Maybe because I don't get the timing right on that one. So even if this looked like the start of that, but with the news due at 9 and all, you have to stay away. And the second reason is, even if I took the trade, it would have stopped out. So my other setups are, and liquidity grab and those things are more valid. And worst case, I will not be in that trade at least, and I could enter later here. This is more like an ABC pattern or a bull flag breakout. So
Uptrend.
let's see what happens. So this is another reminder to uh, respect the stops and then take new trades in that way. So I could uh, the shifting bias here was the major problem. So if I could not find the breakout structure that I'm looking for in the 1 minute or 5 minute chart, should see what breakout structure it's presenting in at least an hourly chart. So, or even in the daily chart. So that is huge. So, it broke above even on the daily chart, which means the liquidity will still be below my entry on a daily chart, but for it to pull back there, the timings may be completely off. So even if I'm looking at the hourly chart breakout structure, its liquidity is somewhere here. So it took almost 2 days. So I cannot wait 2 days with this position. With day trading, I have to close at the end of the day anyway. And so for now, I will see what new setups that develop where I can successfully close this position and go into the new position. So planning the next move, which is to close this and or shift my bias. So if I get the next downtrend signal, that is more reliable, because typically after a strong uptrend like this first time and uh, will not succeed, but second time has higher probability, and if it happens the third time, that is very likely. Um, you know, so the couple of things that is in favor are we have the bigger number here as the resistance, all-time high, but things that are against me are good enough volume, and it might just retouch this moving average and then bounce back from there. And then we have this liquidity here that broke this. So unless it breaks down, unless the sellers succeed here, it will not come down anytime soon. So on the 5 minute, we have the long upper wick here, and that can typically act as a reversal signal. But the strong uptrend like this, that is the power of the context. They won't reverse that soon. Of course, with NQ, anything is possible. It can go up and down, but that is not part of the plan, which is part of the anything can happen. Part of the plan is to just protect your account, like risk management. But don't count on it to reach your profit goals or anything. Because even if it slows down here, it might go sideways for a while, and then it can bounce higher, or it can retrace. So for now, waiting and watching. The hard stop is still in place, almost near the daily loss limit, which is about 400 ticks on this one. So we still have more than 40% buffer there on the daily loss limit. For that reason, I'm giving it some time. I'm not saying that is the good strategy or anything.
Downtrend.
Now that I got one more signal, my probabilities are there, but it does not mean it will continue to downtrend, right? It can do some more sideways here, or it can hit R2 and then go back. So only the time will tell how soon this next set of moves will play out. So I'm just waiting and watching and looking for the next balancing act.
Downtrend. Downtrend. Potential downtrend. 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 Potential downtrend. Downtrend.
Order cancelled. Order cancelled.
Okay, saved only by the bell. It could go lower and even VWAP and this big number even further could have been the targets. I was just happy to see my losing position recover. So also this 50% Fibonacci usually acts as a support and things rebound there. So I was controlling my greed, but uh, let me quickly review what went wrong and what eventually worked. And this is not something I want to count on. So the ideal execution here was, so when I took this short, saw this upper long wick, right? And also thought it's already overextended. And so at least it will come down to retest the this yesterday's high that it broke, which is eventually that is what is happening, but much later. So even here, even if I did not take this, I would have taken here, here. So my bias was already kind of set. I was not flexible enough. So this strategy or this setup, which is manipulation candle reversal, we should wait for a confirmation on the 5-minute chart. So when I saw this here and having the big number here, I should wait for a couple of more candles like this. So after this, if I set my
Downtrend.
limit order here, and if it leaves without me, that's fine. I should not regret that. If I had done that, that would have been ideal trade. So other hand, even if let's say I made this mistake, stick to the original stop where this was the longer upper wick that I'm going with. That means my stop should not be too much above from there, or at least at R2. But at that time, I was already committed and this sunk cost fallacy crept in. So just kind of thought that it has to pull back at least 50%. So gave it enough room and utilized more than half of daily buffer. But it worked out, and I don't want to be greedy that it might keep going down. I will look for a fresh new setups, but this current position itself just almost like a very small win for now. So, so in a nutshell, um, wait for this 5 minute candle confirmation. And even if I make the mistake, stick to the original stop and let it stop out. So here, even if I stopped out, I might have made the same mistake again, but I should just, uh, once you make a mistake, it's kind of hard to stay on the right side of the equation or right side of the trend. But so that's why let's skip that mistake part. Let's go to the ideal execution, which is here, and then shoot for this 50% target. At that point, yes, stick to this original stop, and that's it.
Downtrend.
So don't try to go against, especially even though there is a upper wick, this is not a red candle. And second thing is, even if that is the case, you should wait for next bar to close. And it was not closing like with a higher range or anything. So there was no need for me to catch it immediately that it is going to leave without me or anything like that. So that's why it's easy to avoid these mistakes. I just need to remind myself and review this. So even when I get this long wick or these doji candle bars, they can break on either side. So for example, this is the doji here. So this one, so it can break down or up. So, you can wait for this candle to form or even to close.
Potential
And
downtrend.
even if you go long there, that is a valid trade. So that is, I'm still looking at 1 minute candles, right? So now here, if you get a doji, this doji kind of bar, it broke out above and you don't want to take this because it's overextended. Let's move on to next trade, and I'm glad that it recovered and it is completely retesting this yesterday's high. And at this point, let's see what new opportunities develop and trying not to jump in too soon and hopefully not too late either.
Downtrend.
Order submitted. Order submitted. Order canceled.
Potential downtrend. Potential downtrend. Potential uptrend. Potential downtrend.
Order submitted.
Downtrend.
Order canceled.
Downtrend.
Hey, you ever feel like you know what to do in trading, but just can't pull the trigger the right way? Yeah, that's why The Disciplined Trader by Mark Douglas is still one of the best books out there. Let's talk about it. As I want to share some takeaways from The
Downtrend.
Disciplined Trader. So this book hit me hard the first time I read it, and it still makes sense every time I come back to it. In that book, Mark Douglas basically lays out why trading is so difficult, even if you know the patterns, right? So the right setups and the risk management, because it comes down to your mindset and your emotions. So how you handle uncertainty, right? He talks about how the market is a place of unlimited opportunity but also unlimited risk. And that freedom can really mess with your head. Because nobody's there to force you to stick to your plan. Nobody's there to stop you from chasing or revenge trading or oversizing, right? It's all on you. And that's what makes trading so personal and so challenging. And Mark Douglas calls out the mental habits that sabotage traders. So, things like overconfidence after a win or fear after a loss, or the constant urge to prove you are right, man, that sometime hits me, right? So, because I have been there many times, and the market humbles you fast. But if you are still locked in that mindset of proving something, you can blow up your account before you even see it coming, right? So, he also talks about risk, defining it, accepting it, and letting go of the need to control the outcome, right? And that is a big one because the second you accept that anything can happen, you free yourself to just follow the plan, all right? And you are not fighting price action, you are not forcing trades, and you are simply responding. And one of my favorite points from The Disciplined Trader is that the market doesn't care about you. It has no memory, no emotion, it's not out to get you, all right? So it's just there, and that mindset shift to stop talking market moves personally, can change everything, all right? So I remind myself of that almost every day, because if I don't, I slip right back into
Downtrend.
fear or frustration. And you know what? It's still a work in progress, right? Nobody masters trading psychology overnight. It takes reps, it takes awareness. All right, so it takes a willingness to see your own mistakes without crushing yourself over them. All right, so Mark Douglas makes it clear. All right, so your job isn't to predict, it's to manage risk, follow the rules, and trust your edge. That's it, right? Simple but not easy. And he describes how overconfidence in trading has to come from uh, consistency. I meant how confidence in trading has to come from consistency, not a single big win, not a hunch, right? But a repeatable process. And the courage to stick to that process even when you feel uncertain, that's the real test. So every trader I know who has made it long term has gone through this, and learning to trust the process, learning to trust their risk management, and learning to act even if it feels uncomfortable, right? And that's what the disciplined trader drills home, all right? So it's why I think this book is timeless. If you haven't read it, I really recommend picking it up and highlight it, make notes, read it again later, after more experience, right? Because every time you will see something new. I know I do. So yeah, if you feel like you know what to do, but you struggle to actually do it, this book will open your eyes. Mark Douglas lays it out in a way that clicks, right? Trading is a mind game. It's you versus you. And the more you see that,
Potential
the more
downtrend.
consistent you can become.
Order
So
submitted.
don't just study patterns, study yourself, study how you react under pressure, and study your habits,
Order
right? That's where
submitted.
the real edge is. And that's what Mark Douglas helps us see. Okay, so stay disciplined today and trade safe. And let's see what comes next in the charts and how to react to it.
Potential downtrend.
Order cancelled.
So I'll be wrapping up the YouTube stream now, and the Zoom room the Zoom trading room will continue for some more time. And these are the trades from today. So this first one was a short taken at 8:36. I'm not so proud of it, but I pulled the trigger a little bit too soon. I already talked about it in the commentary in the first hour. So this upper tick or the upper wick is what
Potential uptrend.
kind of I got trapped, but without doubling down, I was able to manage the risk, and I'm glad it worked out. I'm not so proud, but rest of the trades were controlled, even though I gave little bit room here. So the second one was a long, entered at 9:39, closed. Wait, yeah, long entered buy time is first. Short, if it is short, the sell time is first. So since this is long, 9:39 closed in 27 seconds later, and that hit the target, 44 ticks. And the third one I was not particularly looking for, but when it broke down like this, I took a market order. It could have been a limit order instead. So, it became a little bit iffy. What if this is a fake breakdown or um, a break failure? But I mean, that did work. The reason for that is, this breakout structure might continue, but this breakout structure can also go up to grab liquidity. That's fine. And then the next one is again the same principle. Let me zoom in and see actually what I saw there. Also, it's ideal to keep on the chart that you use to trade, I keep the scale fixed so that I get the constant idea of the range of each bar. But also to see the bigger context, sometimes it helps to see the flexible, like dynamic scale. But anyway, so now here is the actual liquidity grab is happening. So unless there are any counter trend suggestions, like see here, this wick, if it is going to, if this support is going to hold and this fair value gap is able to hold, so there is a likely chance of some reversal is here. Because it already grabbed the liquidity a couple of times. So anything is possible. My tendency is that it might go down one more time, but I have to pay attention to these candles. And yesterday I took a wrong position like that. But I will see what new opportunities present after a short break in the Zoom room. And for the YouTube, I will see you tomorrow. Have a great one.